Pharmaceutical is one of the most complex industries. It has long cycles, strict regulations, and huge upfront investments. Tracking the right KPIs helps leaders make smarter decisions like when to invest in more trial, or where to optimize production, or how to protect their profits post they get the patents. In this video, I'll break down the top 15 pharma industry KPIs that every FP&A, R&D, and operations leaders must master to measure innovation, efficiency, and profitability. So let's dive in, starting with the lifeblood of pharma industry, which is the R&D. Pharma KPI number one is the R&D spend as a percentage of the total revenues. As the name suggests, it measures how much of your revenues is reinvested into research and innovation. It is calculated by taking the total R&D spends and dividing it by the total revenues. FP&A teams use this to benchmark innovation intensity. Higher R&D spends usually signal long-term pipeline strength, but it must also translate into successful medicines and drugs. For example, if a company earns $10 billion of revenues and it spends $2 billion annually on R&D, that's a 20% R&D spend on revenue. Now, spending is one thing and success is another. So, next, let us measure what that investment actually delivers. Pharma KPI number two is the medicine approval success rate, which tracks how many medicines successfully pass clinical and regulatory hurdles. It is calculated by taking the approved number of medicines, dividing it by the total submitted medicines. FPA teams use this to forecast R&D return on investment and assess the pipeline risk. For example, if 5 medicines are approved out of the 20 submitted, that's a 25% success rate. But before a medicine earns revenues, the speed matters, which is how fast can you get it to the market. That brings us to our pharma KPI number three, which is time to market for new medicines, which measures how long it takes from the initial discovery to the commercial launch. It is calculated by subtracting the research start date from the launch date. It matters to FP&A because shorter cycles improve competitive advantage and cash flow timing for FP&A models. Now, let us switch to production, where efficiency directly impacts the profitability. Pharma KPI number four is the manufacturing yield rate. It shows the percentage of high quality output versus the total production. It is calculated by taking the good number of batches and dividing it by the total batches produced. FP&A teams model yield to project waste cost, margin pressure, and efficiency improvements. Now, after talking about the yield rate, we'll move on to the cost side. So, what does it take to produce each batch? KPI number 5 is the cost per batch produced, which measures the total manufacturing cost per production batch. It is calculated by taking the total production cost and dividing by the batches produced. It helps track economies of scale and standardize cost benchmarking across facilities. Next, we go to inventory, which plays a huge role in the pharma, balancing supply and expiry. KPI number 6 is the inventory turnover ratio, which tracks how quickly the inventory moves from production to sale. It is calculated by taking the total cost of goods sold and dividing it by the average inventory. FP&A uses the inventory turnover ratio to manage working capital and reduce write offs due to expiry. But efficiency means nothing without compliance. So let us measure that next. Pharma KPI number 7 is the regulatory compliance rate, which tracks adherence to the industry regulations and GMP standards. It is calculated by taking the compliant audits and dividing it by the total audits. Non compliance leads to fines, recalls, and loss of investor confidence, which is a key FP&A risk factor. Now that we have ensured compliance, next let us talk about the sales performance. KPI number 8 is the sales growth by product origin, which shows revenue growth segmented by product line or geography. It is calculated by taking the current period sales minus the previous period sales divided by the previous period sales into 100. FP&A uses this for sales forecasting, portfolio prioritization, and market expansion decisions. But not all medicines are equally profitable. Let us measure gross margins per product next. On a quick side note, if you are serious about growing your career in FP&A, then do check out our certified global FP&A professional program. CGFPA is a 6-month accredited certification in FP&A designed to help you become real business partners. If that sounds something you would be interested in, links are in the description. Also, there are a bunch of free resources that you can download on FP&A, including books and free courses. You will find all the links in the description. KPI number 9 is the gross margin per product line, which shows profitability by product. It is calculated as revenues minus COGS divided by the revenues into 100. FP&A teams use this for SKU level profitability and pricing strategy. After discussing profitability, next let us talk about safety and quality, which are two critical trust pillars in the pharma industry. Pharma KPI number 10 is the adverse event reporting rate, which measures the frequency of reported side effects relative to total prescriptions. It is calculated by taking the adverse events divided by the total prescriptions into 100. FP&A teams monitor this for potential legal compliance or recall cost exposure. Speaking of trials, let us also check how well clinical phases perform. KPI number 11 is the clinical trial success rate, which tracks the percentage of clinical trials that meet the desired endpoints. It is calculated by taking the successful trials and dividing it by the total trials. A high trial success means lower sunk R&D costs and faster time to market. Now, let us see if that research actually pays off. Pharma KPI number 12 is the return on R&D investments, also known as RORI. It measures the financial return generated from the R&D spending. RORI is calculated by taking the gross profit from the new medicines, dividing it by the total R&D spent into 100. FP&A uses RORI to decide future funding allocation across medicine portfolios, but even successful products can stumble through recalls. That brings us to our pharma KPI number 13, which is the product recall rate, which tracks the frequency of the product recalls due to quality or safety issues. It is calculated by taking the recalled batches, dividing it by the total batches. Recall hits brand trust and creates massive financial liabilities. FP&A must model these scenarios. Once medicines are made, speed to market depends on your distribution. Pharma KPI number 14 is the distribution lead time, which measures how long it takes to deliver finished medicines to distributors or pharmacies. It is calculated as delivery date minus the dispatch date. Shorter lead times improve customer satisfaction and reduce holding costs. And finally, the silent threat to every pharma company is the patents. That brings us to our final pharma KPI number 15, which is patent expiry impact, also known as revenue at risk. It estimates revenue vulnerable to patent expirations. It is calculated by taking the revenue from expiring patents and dividing it by the total revenues. FP&A uses this to model patent cliffs when generic medicines enter and erode sales. From R&D to regulatory, from manufacturing to market, these KPIs together give a 360-degree view of the pharma company's performance. FP&A teams connect these metrics to tell one powerful story: how science translates into sustainable financial outcomes. Let's do a quick recap. We first talked about innovation KPIs like the R&D percentage, RORI, drug and trial success rates, and time to market. We then move to operational KPIs like the yield and the cost per batch, downtime, inventory, and compliance. We also talked about the commercial KPIs like the sales growth, gross margin, distribution, and patent impact. Finally, we talked about quality and risk KPIs like the adverse events and the recall rate. These tracked on a consistent basis will help FP&A team not just report performance but also how to predict and help the business teams make faster decisions. Hope you enjoyed the breakdown of the top 15 pharma company KPIs. For more such FP&A videos, do like and subscribe to our channel. Also, let me know in the comments below which other industry KPIs you would like me to cover in our next videos. Also, don't forget to check out a bunch of free resources, including free courses, books, and cheat sheets. All the links are in the description. Thank you so much for watching, and I will see you in the next video.